You have learnt about the reconstitution of a partnership firm which takes place on account of admission, retirement or death of a partner. In such a situation, while the existing partnership is dissolved, the firm may continue under the same name if the partners so decide. In other words, it results in the dissolution of a partnership but not that of the firm. According to Section 39 of the Partnership Act 1932, the dissolution of partnership between all the partners of a firm is called the dissolution of the firm. That means the Act recognizes the difference in the breaking of relationship between all the partners of a firm and between some of the partners. And it is the breaking or discontinuance of relationship between all the partners which is termed as the dissolution of partnership firm. This brings an end to the existence of firm, and no business is transacted after dissolution except the activities related to closing of the firm, as the affairs of the firm are to be wound up by selling firm's assets and paying its liabilities and discharging the claims of the partners. 4.1 Dissolution of partnership. As stated earlier, dissolution of partnership changes the existing relationship between partners, but the firm may continue its business as before. The dissolution of partnership may take place in any of the following ways. 1. Change in existing profit-sharing ratio among partners. 2. Admission of a new partner. Learning objectives. After studying this chapter, you will be able to state the meaning of dissolution of partnership firm. Differentiate between dissolution of partnership and dissolution of a partnership firm. Describe the various modes of dissolution of the partnership firm. Explain the rules relating to the settlement of claims among all partners. Prepare realization account. Dissolution of partnership firm. 4. Rationalized 2023-24 Dissolution of partnership firm 157. 3. Retirement of a partner. 4. Death of a partner. 5. Insolvency of a partner. 6. Completion of the venture, if partnership is formed for that. And 7. Expiry of the period of partnership, if partnership is for a specific period of time. 4.2 Dissolution of a firm. Dissolution of a partnership firm may take place without the intervention of court or by the order of a court, in any of the ways specified later in this section. It may be noted that dissolution of the firm necessarily brings in dissolution of the partnership. However, dissolution of partnership would not necessarily involve dissolution of firms. Dissolution of a firm takes place in any of the following ways. 1. Dissolution by agreement. A firm is dissolved a. With the consent of all the partners, or b. In accordance with the contract between the partners. 2. Compulsory dissolution. A firm is dissolved compulsorily in the following cases. A. When all the partners or all but one partner become insolvent, rendering them incompetent to sign a contract. B. When the business of the firm becomes illegal. Or C. When some event has taken place which makes it unlawful for the partners to carry on the business of the firm in partnership, e.g., when a partner who is a citizen of a country becomes an alien enemy because of the declaration of war with his country and India. 3. On the happening of certain contingencies, subject to contract between the partners, a firm is dissolved, a. If constituted for a fixed term, by the expiry of that term. B. If constituted to carry out one or more ventures, by the completion thereof. C. By the death of a partner. D. By the adjudication of a partner as an insolvent. 4. Dissolution by notice. In case of partnership at will, the firm may be dissolved if any one of the partners gives a notice in writing to the other partners, signifying his intention of seeking dissolution of the firm. 5. Dissolution by court. At the suit of a partner, the court may order a partnership firm to be dissolved on any of the following grounds. A. When a partner becomes insane. B. When a partner becomes permanently incapable of performing his duties as a partner. Rationalized 2023 to 24,158 Accountancy, Not-for-Profit Organization and Partnership Accounts. C. When a partner is guilty of misconduct which is likely to adversely affect the business of the firm. D. When a partner persistently commits breach of partnership agreement. A. When a partner has transferred the whole of his interest in the firm to a third party. F. When the business of the firm cannot be carried on except at a loss. Or G. When, on any ground, the court regards dissolution to be just and equitable. Distinction between dissolution of partnership and dissolution of firm basis. Dissolution of partnership. Dissolution of firm. 1. Termination of the business is not the business of the firm is business terminated. Closed. 2. Settlement of assets and liabilities. Our assets are sold and assets and revalued and new balance liabilities are paid off. Liabilities sheet is drawn. 3. Court does not intervene. A firm can be dissolved by intervention because partnership is the court's order. Dissolved by mutual agreement. 4. Economic relationship. Economic relationship between the partners. Continues though in comes to an end. A changed form. 5. Closure of books does not require because the books of account are. The business is not closed. Terminated. Test your understanding. I. State giving reasons. Which of the following statements are true or false? 1. Dissolution of a partnership is different from dissolution of a firm. 2. A partnership is dissolved when there is a death of a partner. 3. A firm is dissolved when all partners give consent to it. 4. A firm is compulsorily dissolved when a partner decides to retire. 5. Dissolution of a firm necessarily involves dissolution of partnership. 6. A firm is compulsorily dissolved when all partners or when all except one partner become insolvent. 7. Court can order a firm to be dissolved when a partner becomes insane. 8. Dissolution of partnership cannot take place without intervention of the court. Rationalized 2023-24 Dissolution of Partnership Firm 159. 4.3 Settlement of accounts. In case of dissolution of a firm, the firm ceases to conduct business and has to settle its accounts. For this purpose, it disposes of all its assets for satisfying all the claims against it. In this context, it should be noted that, subject to agreement among the partners, the following rules as provided in Section 48 of the Partnership Act 1932 shall apply. A. Treatment of losses, including deficiencies of capital, shall be paid, I. First out of profits, E. Next out of capital of partners, and E. Lastly, if necessary, by the partners individually in their profit-sharing ratio. B. Application of assets. The assets of the firm, including any sum contributed by the partners to make up deficiencies of capital, shall be applied in the following manner and order. I. In paying the debts of the firm to the third parties. E. In paying each partner proportionately what is due to him, her from the firm for advances as distinguished from capital, i.e. partner, loan. E. In paying to each partner proportionately what is due to him on account of capital. And, IV, the residue, if any, shall be divided among the partners in their profit-sharing ratio. Thus, the amount realized from assets along with contribution from partners, if required, shall be utilized first to pay off the outside liabilities of the firm such as creditors, loans, bank overdraft, bill payables, etc. It may be noted that secured loans have precedence over the unsecured loans. The balance should be applied to repay loans made by the partners to the firm. In case the balance amount is not adequate enough to pay off such loans and advances, they are to be paid proportionately. The amount left thereafter is utilized in settlement of capital account balances. Then the surplus, if any, is divided among F. Any is D. Private debts of a partner coexist, the following then the surplus if any is divided among partners in their profit-sharing ratio. Private debts and firm's debts, where both the debts of the firm and private debts of a partner coexist, the following rules, as stated in Section 49 of the Act, shall apply. A. The property of the firm shall be applied first in the payment of debts of the firm, and then the surplus, if any, shall be divided among the partners as per their claims, which can be utilized for payment of their private liabilities. B. The private property of any partner shall be applied first in payment of his private debts, and the surplus, if any, may be utilized for payment of the firm's debts, in case the firm's liabilities exceed the firm's assets. It may be noted that the private property of the partner does not include the personal properties of his wife and children. Thus, if the assets of the firm are not adequate enough to pay off firm's liabilities, the partners have to contribute out of their net private assets minus private liabilities. Rationalized 2023 to 24,160 Accountancy, Not-for-Profit Organization and Partnership Accounts. Inability of a partner to contribute towards deficiency in the context of settlement of accounts among the partners. There is still another important aspect to be noted, i.e., when a partner is unable to contribute towards the deficiency of his capital account, the account finally showing a debit balance, she is said to be insolvent, and the sum not recoverable is treated as capital loss for the firm. In the absence of any agreement, to the contrary, such a capital loss is to be borne by the remaining solvent partners in accordance with the principle laid down in Garner vs. Murray case, which states that the solvent partners have to bear such loss in the ratio of their capitals as on the date of dissolution. However, the accounting treatment relating to dissolution of partnership on account of insolvency of partners is not being taken up at this stage. 4.4 Accounting treatment. When the firm is dissolved, its books of account are to be closed and the profit or loss arising on realization of its assets and discharge of liabilities is to be computed. For this purpose, a realization account is prepared to ascertain the net effect, profit or loss, of realization of assets and payment of liabilities, which may be is transferred to partners' capital accounts in their profit-sharing ratio. Hence, all assets, other than cash in hand, bank balance and fictitious assets, if any, and all external liabilities are transferred to this account. It also records the sale of assets, and payment of liabilities and realization expenses. The balance in this account is termed as profit or loss on realization, which is transferred to partners' capital accounts in the profit-sharing ratio, see Figure 5.1. Doctor Realization Account CR. Particulars amount. As. Intangible assets X, bank loan mortgage X, land and building X, sundry creditors X, plant and machinery X, bills payables X, furniture and fittings X, bank overdraft X, loan to other parties X, outstanding expenses X, bills receivables X, provision for doubtful debts X, sundry debtors X, cash bank, sale of assets X, cash bank X, partners capital account X, payment of liabilities, assets taken by the partner, cash bank X, loss transferred to partners X, payment of unrecorded liabilities, capital accounts, partners capital account X, loss transferred to partners X, investments X, investment fluctuation fund X, liability assumed by the partner, profit transferred to partners X, capital accounts in their tick. The correct answer 1. On dissolution of a firm, bank overdraft is transferred to a. Cash account, b. Bank account, c. Realization account, d. Partners capital account. 2. On dissolution of a firm, partners loan account is transferred to a. Realization account, b. Partners capital account, c. Partners current account, d. None of the above. 3. After transferring liabilities like creditors and bills payables in the realization account, in the absence of any information regarding their payment, such liabilities are treated as a. Never paid, b. Fully paid, c. Partly paid, d. None of the above. 4. When realization expenses are paid by the firm on behalf of a partner, such expenses are debited to a. Realization account, b. Partner's capital account, c. Partner's loan account, d. None of the above. 5. Unrecorded assets when taken over by a partner are shown in a. Debit of realization account, b. Debit of bank account, c. Credit of realization account, d. Credit of bank account. 6. Unrecorded liabilities when paid are shown in a. Debit of realization account, b. Debit of bank account, c. Credit of realization account, d. Credit of bank account. 7. The accumulated profits and reserves are transferred to a. Realization account, b. Partner's capital accounts, c. Bank account, d. None of the above. 8. On dissolution of the firm, partner's capital accounts are closed through a. Realization account, b. Drawings account, c. Bank account, d. Loan account. Rationalized 2023 to 24,000. Annul entries 1. For transfer of assets, all asset accounts excluding cash, bank and the fictitious assets, if any, are closed by transfer to the debit of realization account at their book values. It may be noted that sundry debtors are transferred at gross value and the provision for doubtful debts is transferred to the credit side of realization account along with liabilities. The same thing will apply to fixed assets, if provision for depreciation account is maintained. Realization A, C drive. To assets, individually, A, C2. For transfer of liabilities, all external liability accounts including provisions, if any, are closed by transferring them to the credit of realization account. Liabilities, individually, drive. To realization A, C3. For sale of assets, bank A, C drive. To realization A, C4. For an asset taken over by a partner, partner's capital A, C drive. 5. For payment of liabilities, realization A, C drive. To bank A, C. With the same value. With the amount assets are taken over. With the amount at which settled. Rationalized 2023-24 dissolution of partnership firm 165. 6. For a liability which a partner takes responsibility to discharge, realization A, C drive. To partner's capital A, C7. For settlement with the creditor through transfer of assets, when a creditor accepts an asset in full and final settlement of his account, no journal entry needs to be recorded. But, if the creditor accepts an asset only as part payment of his/her dues, the entry will be made for cash payment only. For example, a creditor to whom Rs. 10,000 was due accepts office equipment worth Rs. 8,000 and is paid Rs. 2,000 in cash. The following entry shall be made for the payment of Rs. 2,000 only. Realization A, C drive. To bank A, C. However, when a creditor accepts an asset whose value is more than the due amount, she pay cash to the firm for the difference, for which the entry will be bank A, C drive. To realization A, C8. For payment of realization expenses, when some expenses are incurred and paid by the firm in the process of realization of assets and payment of liabilities, realization A, C drive. To bank A, C, B, when realization expenses are paid by a partner on behalf of the firm, realization A, C drive. To partner's capital A, C, C, when a partner has agreed to bear the realization expenses, I, if payment of realization expenses is made by the firm, partner's capital A, C drive. To bank A, C, E, if the partner himself pays the realization expenses, no entry is required. Note: in the absence of information about who is paying the expenses, it is implied that expenses are paid by the partner who has agreed to bear expenses. 9. For agreed remuneration to such partner who agrees to undertake the dissolution work. Realization A, C drive. To partners capital A, C 10. For realization of any unrecorded assets including goodwill, if any bank A, C drive. To realization A, C. Rationalized 2023 to 24,166 accountancy, not-for-profit organization and partnership accounts. 11. For settlement of any unrecorded liability realization A, C drive. To bank A, C 12. For transfer of profit and loss on realization, crossing. Balance A, in case of profit on realization A, C drive. To partners capital A, C, individually, A, C, B, in case of loss on realization partners capital A, C, individually, Dr. Blance, to realization A, C 13. For settlement of loan by a firm to a partner, bank A, C drive. To loan to partners A, C 14. For transfer of accumulated profits in the form of general reserve to partners' capital accounts in their profit sharing ratio, general reserve A, C drive. To partners capital A, C, individually, 15. For transfer of fictitious assets, if any, to partners' capital accounts in their profit sharing ratio, partners capital A, C, individually, drive. To fictitious asset A, C 16. For payment of loans due to partners loan A, C drive. To bank A, C 17. For settlement of partners accounts if the partner's capital account shows a debit balance after posting of rebound entries firms. He brings in the necessary cash for which the entry will be, bank A, C drive. To partners capital A, C the balance is paid to partners whose capital accounts show a credit balance and the following entry is recorded. Partners capitals A % second, individually, drive. To bank A, C it may be noted that the aggregate amount finally payable to the partners must equal to the amount available in bank and cash accounts. Thus, all accounts of a firm are closed in case of dissolution. Rationalized 2023-24 dissolution of partnership firm 167. Illustration 2. Sita, Rita and Meter are partners sharing profit and losses in the ratio of 2:2. 1. Their balance sheet as on March 31, 2017 is as follows. Introduced in the chapter. 1. Dissolution of partnership 4. Compulsory dissolution 2. Dissolution of partnership 5. Dissolution by notice firm 6. Realization expenses 3. Partnership at will 7. Realization account. Summary. 1. Dissolution of partnership firm. The dissolution of a firm implies the discontinuance of partnership business and termination of economic relations between the partners. In the case of a dissolution of a firm, the firm closes its business altogether and realizes all its assets and pays all its liabilities. The payment is made to the creditors first out of the assets realized and, if necessary, next out of the contributions made by the partners in their profit-sharing ratio. When all accounts are settled and the final payment is made to the partners for the amounts due to them, the books of the firm are closed. 2. Dissolution of partnership. A partnership gets terminated in case of admission, retirement, death, etc. of a partner. This does not necessarily involve dissolution of the firm. 3. Realization account. The realization account is prepared to record the transactions relating to sale and realization of assets and settlement of creditors. Any profit or loss arising out of this process is shared by partners in their profit-sharing ratio. Partners' accounts are also settled and the cash or bank account is closed. Questions for practice. Short answer questions 1. State the difference between dissolution of partnership and dissolution of partnership firm. 2. State the accounting treatment at the time of dissolution of a firm for I. Unrecorded assets E. Unrecorded liabilities 3. On dissolution, how will you deal with partner's loan if it appears on the A. Asset side of the balance sheet, B. Liabilities side of balance sheet? Bank account. Drive CR. Particulars amount, Rs. Particulars amount, Rs. Balance B, D 5,000 realization, expenses, 2,000 realization, assets realized, 51,000 Menas capital 32,400. Tina's capital 21,600 56,000 56,000. Rationalized 2023-24 dissolution of partnership firm 185. 4. Distinguish between firm's debts and partner's private debts. 5. State the order of settlement of accounts on dissolution.